Good morning, Chris Robinson, Robinson Ag Marketing. Wednesday, July 1st. We've got today and tomorrow. Then we're closed for the holiday on Friday. We'll reopen on Sunday. Just get right to it. Dees corn up 5.5 cents, trading 441.5. Traded as high as 43 3/4 last night. Novi beans up a dime, traded as high as 11.61. Settled here at 11.54. I wrote about this in my letter yesterday. Also, wheat higher, 9 higher, 8 higher across the board. The funds were short going into this, and it looks like they were wrong, guys. They were wrong in January as well. Go back and look. I put it in my letter last night. I called it the hat trick. Back in January on the lows, they were short 150,000 contracts of wheat. They were short corn. They were long a little bit of beans. The day after that report, remember how horrendous the report was in January? They got shorter, and then they were, rode it all the way up. By the time we got to the top in May, they were long 300,000 contracts of corn, long 200,000 contracts of soybeans, and they turned around and they rode that all the way down on this sell-off. They ended up selling 370,000 contracts of corn. Now they're short 70,000 contracts in the hole on the bottom, and now we're rallying. So everybody talks about how they're, somehow the masters of the universe. You've got to watch these guys, because when they are wrong, they're just like everybody else, okay? They may have AI, but remember, the AI is programmed by a person. So I would say this, I hope they're wrong again. They're short here. I hope they get their faces ripped off and the farmer gets a chance to benefit. So if we do get that rally, don't look a gift horse in the mouth. We've already got Novi beans back to 11.53. Novi beans tested 11.35 about 17 times this year. That's the halfway back point between the entire year's range, the low of 10.55 and the high of 12.14. December corn has now had an 80-cent range from 5.06 down to 4.31. Halfway back there is around 4.66, 4.67, and we're only 20 cents away from there. So, boy, it's the best way to head into July 4th that we possibly could have after this report. The only way better would have been if the USDA had come out and said that, there were a lot less corn acres. That was the odd thing. They really didn't change anything. Obviously, we know that that's the least amount of wheat acres that we're going to harvest. I don't know, 150 years? Crazy, right? So I got to just wrap it up with this. It's a good way to head into July 4th weekend. It could have been a lot worse. This is why we rolled all of our puts down, not because I knew the low was in. Don't give me that garbage. I didn't want to have expensive puts on the books in case we rallied. We did have calls on for people that wanted to have them on for anything that they sold, not because I knew we were going to rally, but because we're out here to try to manage risk. We'll see what happens today in the cattle. Cattle looks like it might be under some pressure here, although we'll have to see what happens. Stock market's a little bit lower. Crude oil down 50 cents, trading 68.22. So whatever's going on in Iran, the crude oil market's not worried about it today. And what else? I think that's about it. Looking at silver, what's silver doing? Sitting there at 58, 59, 60. It had traded down to about $55. Maybe that'll be a low. Maybe it won't. Okay, thanks for your time. This is Chris Robinson, Robinson Ag Marketing. If you're not getting my letter, take a look at it. You can go back and Monday morning quarterback me. What did he say? What was his opinion? What was he recommending? It's all there in black and white. You guys have a good rest of the day. Take care.